Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. The markets today are in pause mode. Major indices in a sideways band after a massive 7% uptick on the Nifty in the past 15-odd trading sessions. The index is facing resistance at 24,500, 24,550 and is repeatedly returning from that level today. Minus 61 at 24,400. The Bank Nifty is down almost 400 points at 54,536, and there's a nice bout of profit booking that's happening across the market space. If you look at how stocks are behaving at the moment, the advance decline ratio is roughly 1:4. 400 shares are in the green, almost 1900 shares are in the red, so it's an easy 1:4.5, which means that for every 2 shares that are in the green, there are 9 that are in the red. Selling or profit booking across the board, we track 19 indices for you. 18 are in the red. The one that's in the green, the lone index that is in the green, well, that's also shifted back to the red. So 0.3% down on the Nifty. The Bank Nifty has slipped down to the extent of about 400 points. The Nifty PSU banking index is the top loser today, down about 2.56% at 6384. The aftermath of earnings from State Bank of India still falling heavy on the shoulders of the PSU banking index. What we'll do is, let's take a market view in, and we are now joined by Mr. Sudeep Bandyopadhyay. He is the group chairman at IndiTrade Capital. Namaste Sudeep ji, and a very warm welcome to you, sir. The market's in fine shape. How are you reading sentiment on Dalal Street? Anything that catches your fancy on the long side?
Market definitely is, or I would rather say was in a good mood till about yesterday. I think today is a different day. There is some volatility definitely which has crept in. Some amount of profit booking and caution is already visible. The geopolitical tension between India and Pakistan has a role to play with that. And of course, if you look at the global events, Shelji, US Fed Fed chair will be speaking sometime later tonight. And of course, there is no question of any interest rate cut in US. And probably the same stand will be maintained, but his commentary will be watched carefully. So the global markets also will be kind of in a pause mode today. Yes, it's a bit of a sideways range-bound move and profit-taking today.
IndiTrade Capital, in terms of deploying either fresh cash or maybe recycling some old stocks over the last 15 sessions or so?
One segment where we have been extremely positive is cement. Shelji, cement has no link with anything global. It is a completely domestic focused industry and very, very region specific, geography specific business. We have seen in Q3, I think demand was a bit slow, but Q4, the signs of demand coming back is clearly visible. The companies, at least the top tier companies, have managed their costs very well. And I think we are probably seeing one of the lowest costs of manufacturing in the cement industry as we speak now. Yeah, going forward, coking coal prices will go up a bit. So cost may go up a bit, but I think we are banking on two things. One is price, the other is volume demand. So price and volume both are expected to go up in the near future, and that augurs well for the industry. Of course, we know that there is a lot of infrastructure spending happening in the country. Real estate construction is happening in the country, and that does lead to incremental demand for cement. Incremental capacity is not coming in a hurry. So cement is one sector where the top companies needs to be looked at. The other sector where we have been positive, and we have been positive for some time, and we maintained our view, and we believe there is a structural positive in that sector, is the power sector. I think we should look at every segment of the power sector and pick the winners, whether it's the generation, whether it's financing, whether it's ancillary. I think there is a secular positive sentiment running through them, and one can pick up stocks in this segment. The last, but not the least, the sector which I'll talk about is construction, infrastructure, engineering, capital goods. I think, again, these are mostly domestic focused. The government of India in the last budget, decided to spend 11 lakh crore on capital expenditure, and that tantamounts to roughly a lakh crore per month of capital expenditure. And this augurs well for the leading infrastructure construction companies in the country. So again, can be picked up, has nothing to do with global headwinds, and these are good buys at current levels.
Okay. So it seems that the focus at IndiTrade Capital is entirely domestic. You are negating the overhang of the tariff war that's happening globally. It may have paused for a while, but we really don't know when will it resurface, Mr. Trump being the unpredictable president that he is of United States. Let's drill down cement a bit further, Sudeep ji. It's a sector that's in pause mode for many months because there was this overhang of a massive acquisitive drive that was happening between the top two players, which is Ultratech and Ambuja. They were just gobbling up mid-cap cement companies left, right, and center. Now that some sanity has emerged in terms of pricing strength, where are you asking your clients to put in money? Are you looking at the large cap space or the mid cap large cap space where there could be a secular up move?
The mid-cap, small-cap cement universe is, maybe it still continues to remain target for acquisition, and these events may lead to significant spurt in value, but that's a bit speculative. So I'm not focusing on that. I'm focusing on fundamentally strong cement sector itself, and there I would recommend buying the leader, which is Ultratech Cement. By far, 180 million ton capacity already in the bag. And of course, expansion as well as acquisition is on the cards. The cost efficiencies have been extracted to the maximum. Demand is picking up. Pricing power is returning. So everything, ticks, and investors will do well to buy into this stock from a long-term perspective. I'm not saying this will go up tomorrow morning or day after it'll come down. That's not the way to look at. If you are looking at building your portfolio, taking the opportunity of this market turbulence, buy an Ultratech and just keep it in your portfolio.
So I think that's a very sensible view, because one would look at survivors in this war of attrition, and of course Ultratech is one of the acquisitive companies over the last 2 years. So Ultratech it is as far as the cement space is concerned. Let's drill it down in power. What looks good to you? Power producers, maybe ancillaries that supply coal to power companies. Of course, now in North India, peak summer is approaching, so demand for electricity will be very high. So, in your estimate, what looks good? Public sector power producers, private sector power producers, their ancillaries. Where is your attention gathered in this sector?
Shelji, at this stage, with the kind of volatility we are witnessing all around us, I prefer large cap and leading companies in the sector, because that way you are kind of taking away a lot of uncertainties out of your, stock selection. Again, here in the largest power producer, which is NTPC, is my favorite. I think they have fantastic backward and forward linkages. Backward in terms of coal supply arrangements, forward linkages in terms of power purchase agreements with multiple electricity boards and other bodies. So that way they're very well integrated. They are putting up incremental 30 gigawatt of capacity, and this is huge. They already have significant capacity. The expansion is doing good. Their green energy subsidiary is doing good. I think, if you want to be in power sector, buy NTPC, keep it in your portfolio, for the foreseeable future. The other segment in the power, Shelji, I'm looking at, which is interesting, if NTPC is adding so much capacity. Every other private player is talking about huge capacity addition. Adani Power is talking about significant power capacity addition. Under these circumstances, the demand for financing will be significant. And the commercial banks can't meet this demand. So obviously the power financiers will play a huge role. And you can take your pick between the three power financiers, PFC, REC, and IREDA. I think all three have fantastic potential going forward. Yes, there have been a lot of ups and downs and challenges in the recent past as far as these power financiers are concerned. But I think if you are taking at a 3 to 5 year kind of a view, they will have a fantastic run considering the power demand and the related financing demand.
I think that's a very, very sensible and practical portfolio construction. Focus on the largest player when it comes to producing power, and then maybe look at loan providers rather than maybe ancillaries or second, third rung power producers. That's really very sensible, Sudeepji. My compliments to your thought process. It's phenomenal in terms of the sheer intelligence and common sense it deploys in stock picking. Let's again look at the defense play. There is this unfortunate incidents that all of us have gone through over the last 15 days or so, and the aftermath of that is visible on stock prices within the defense space. Any particular favorites in this space, or are they overheated at the moment?
Well, defense definitely is to an extent overheated, but what we need to focus on is sectors amongst defense which has long-term potential. I do believe that defense electronics is one space which needs to be looked at very, very seriously. Look, defense electronics caters to all three segments of the armed forces: Air Force, Army, and Navy. The way the modern warfare is going, electronics does play a significant role. And we have, world-class companies in Bharat Electronics, which is doing fantastic. It's got a clean balance sheet. It's got very good efficiency track record. Valuations are not cheap, and I don't think you will get cheap valuation in this sector. But if you are building a portfolio for a long-term point of view, I think BEL needs to be there. Also remember export opportunities which are emerging, considering the rearmament which is happening all over the world, and the ancillary segments or opportunities which BEL has started capturing, namely, let's say, metro electrification, electronics for the metro railways in different parts of the country. Now, this is also an emerging and excellent opportunity. So BEL has been my pick, defense electronics area. The other segment where I'm very bullish from a long-term perspective is the shipyards. Now, if you talk about Mazagaon Dock, Cochin Shipyard, Garden Reach Shipyard, they're all good companies, but valuation is very rich. Now, the question is, globally, there is a crisis as far as ship manufacturing is concerned, shipbuilding is concerned. The capacity which is available with China and South Korea. Now, China, for geopolitical reasons, is not considered by Western powers for shipbuilding. This capacity in South Korea is booked for decades. Now they have to build ships because rearmament is going on, and the opportunity of Indian shipbuilders or even new shipyards to come up around the Indian coast is huge. Now we should not forget the opportunity which all the existing shipyards are sitting on, and I'm very positive on these companies. Yeah, valuation is very rich, so you have to be careful, and if you're buying now, you better be prepared for a 5-year kind of time horizon. But end of the day, it is definitely worth buying the shipyards as well.
When you look at the banking sector, Sudeepji, how have you juxtaposed the earnings that have come in from ICICI and HDFC Bank versus those from SBI and Kotak? There seems to be, some amount of divergence within PSUs and private sector banks. What would be your top bets within the banking space? How are you analyzing SBI at this point of time?
I think, Shalji, you have put the right question. I like SBI, I must tell you. I did look at the results which SBI came up with, and I won't be too perturbed with their results. It was kind of unexpected lines, and the correction post the results which we have seen is, to my mind, an opportunity for accumulating SBI. I think it's an excellent bank. A lot of digitization has happened. The credit growth should come back. Asset quality has improved and is improving even further. Subsidiaries are doing very well. The deposit mobilization was a bit slow, but I'm sure it's going to pick up in the near future. And considering the valuation, I think you are getting at a very reasonable valuation a bank like SBI. So from a long-term point of view, I think SBI definitely is a good pick. I'm not saying ICICI and HDFC are not doing well. They've done excellent. ICICI has been consistently doing well for the last, maybe 8-10 quarters. HDFC has started doing well. And, any parameter you pick, I think they have outperformed the market expectations. So there is absolutely no problem with these banks. But the valuation is not cheap and they have moved up quite a bit. So if I have to pick one banking stock, I will pick up SBI at this juncture. Kotak, I will definitely avoid. I think there are a lot of challenges there. And, they need to get their act together before I get to recommend buying Kotak.
Fair point. So let's stick with the big ones. Sudeep ji is in the mood to only look at large cap companies. So the choice is SBI, NTPC, earlier L&T, maybe Masgaon Dock as well. So that's a fair point. Ultratech. So all the five that I've mentioned are the leading giants, if not the top giant in their respective sector. What about NBFCs, Sudeep ji? Very nice move coming into Bajaj Finance, Sundaram Finance as well. All of them are perking up because of this liquidity improving in the overall banking system, and of course 2 rate cuts that were helpful in probably reducing costs of funds for NBFCs. How are you analyzing companies like Muthoot Finance, Bajaj Finance, maybe Sundaram as well? What looks good?
Well, I'm a little focused, Shalji, on gold finance companies. I think their prospects are much better under the current circumstances. The couple of things. One is gold prices are moving up. That always helps gold finance companies. The second is the regulatory framework there has kind of stabilized with the latest bunch of guidelines coming in. And it will help the companies stabilize their business and grow in a compliant manner. Both are excellent companies. The 2 leading gold loan companies, Muthoot as well as Manappuram, I think both can be looked at current levels for long-term perspective. As far as other NBFCs are concerned, and we did see the quarterly results recently, there are asset quality challenges on unsecured book, which is coming, and we get to see that in consumption demand for a whole lot of segments also, whether it's FMCG, consumer durable, two-wheelers. There is a bit of a challenge as far as rural and semi-urban India and even urban India in terms of the availability of money and affordability, and that is kind of creating asset quality challenges for this entire segment of unsecured loans, and that is getting reflected in their numbers. I will be a little careful as far as these NBFCs are concerned at this stage. I rather focus on the gold loan companies because they have a solid security and the value of their security is continuously going up. Regulations have stabilized. So yes, gold loan companies is what my choice is.
Okay. So Muthoot obviously being the top leader in this space finds mention in Sudeep ji's top picks. Sudeep ji, when you look at sector rotation that's happening, are you looking at pharma, maybe FMCG at this point of time, or are you staying away?
Well, FMCG, I'm staying away. I'm watching the space because we have seen even Q4 results. I think the commentary was, by and large, the demand hasn't picked up the way they were expecting. And that's a reality on ground. So I'll wait and watch. It should pick up. We are expecting good monsoon, and post-monsoon, I expect demand to pick up. But that is still 4-5 months away. So it's better to wait and watch at this stage. As far as pharma is concerned, I think there are too many moving parts, including the threat of US tariffs looming large. So it is better to, again, wait and watch. If you have to buy pharma, focus on domestic focused pharma companies. Mankind Pharma, which have got about 95% of business in domestic market, can be looked at. Their acquisition recently was also good. And that will help them in the long term. So Mankind, from a long-term perspective, does look good. Rest of the pharma pack, better to wait and watch till this tariff thing settles down.
Okay. Reliance Industries came out with a breakout set of numbers, and that reflected very well on the stock, which has surged maybe 20-25% in the last 1 month or so, and of course it propelled the Nifty higher, it being the third highest heavyweight counter in the Nifty. Is Reliance looking overstretched to you in the short term?
And I won't be able to comment, Shenji, on a very short term because there are multiple other factors which does affect the prices. But if I'm looking at a medium to long term, I think Reliance definitely does look good. Reliance was grossly undervalued. Even before the results came in, that is what I have been maintaining, and it was worth buying from a long-term perspective. Even today, I maintain that stand, even after this, price going up to 1400, 15 kind of levels and all that. Look, the business segments have started doing well. The telecom, Reliance Jiobit, the ARPUs are going up and is expected to further go up. So that's a segment which is growing. Retail, they have started doing what probably they should have started earlier, focusing on EBITDA margins and costs and all that. And that will lead to a lot of streamlining and improvement of margins. The new energy is a focus area. The plans are being articulated. Oil to chemicals, there are a bit of challenge in the petchem segment, but the overall business has started doing well. And the biggest, the value unlocking opportunity through listing or some other structure as far as the telecom business and retail business is concerned is real, and it's going to happen. It's a matter of time. Whether it happens in 6 months or 1 year can be debated, but that it will happen is certain. So from an investor's point of view, having a long-term horizon in mind, I think it's a fantastic buy at current level. Just wait for the value unlocking to happen. You will multiply your, investment.
Fair point. With that, Sudeepji, we'll call it a day. Thank you so much for such a wonderful conversation laced with so much of practical wisdom and quality stock picking. We'll of course remember Ultratech, L&T, NTPC, Muthoot Finance, and the 3 power financiers, PFC, REC, and IRIDA from your end. Thank you for your time, sir. This, ladies and gentlemen, was Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, a very well-known market expert and a person who's been in stocks for the last 3 decades. I hope you enjoyed the conversation as much as I did. Please remain glued to Business Today Television. There's a lot that's happening on the other side of the break.
For more than 6 decades, Warren Buffett wasn't just the face of Berkshire